I had the shower freaking blistering hot. Why? Warm my body up.
Come on, don't.
Hey everybody, sorry I am a bit late. My apologies. How's everybody doing tonight?
You're fired.
All right, you can take over from here, Rob.
Just kidding, bro. How you doing?
Good, dude. Good. I had a meeting that went a little bit longer than I was hoping, so I kind of got stuck. But here we are. And I won't waste any time. Let's get right into it. Hopefully you can welcome me back, Rob. I don't know if I'll be allowed to keep this one going anymore. All right. Thanks, buddy. All right, so let's get right into it. I'm assuming some people will trickle in as we keep going, but we're a couple minutes after the hour, so I really want to make sure we get everything in tonight. Welcome back. We're in the middle of the volume price analysis course series, which we just started last week, so still super fresh. And this week we're going to talk about some of the more foundational or fundamental concepts. We gave a little bit of some teasers as we started off last week, and I really wanted to spend some more time today digging into those in a lot more detail. So with that, just a couple things to mention before we get started. As you guys have probably gotten used to, I've been letting anybody and everybody unmute their mic whenever you guys want. So if you have something to say, feel free to just unmute and start talking. You can interrupt me, tell me to shut up, doesn't matter. And I'm happy to hear you out over voice instead of the text messages. And also, I'm going to continue to give credit where it is due. A lot of the content in this lecture is, I don't want to say directly, but directly taken from this book. So definitely recommend checking this book out. It's pretty cheap. It's like 15, 20 bucks, something like that. And definitely is a very high quality supplement to this lecture series. So go check this out. I don't even have any referral link for you. It's just a full blown, well-earned shout out. Okay, so as I mentioned, we're in the second lecture of the series here where we talk about some of the foundations of volume price analysis. And just as a quick reminder, two main goals or primary goals of the series are to develop successful traders who have a clear understanding of the fundamental principles of VPA, and also to teach attendees how to apply the techniques of VPA to help supplement or create an excellent trading system. And as we kind of established in our prior lecture, and I think I might even have a recap somewhere. Yeah, here we go. So as we established in our prior lecture, VPA or volume price analysis is a trading technique or technical analysis technique that combines volume and price, shocker, to understand market trends and predict future price action. And as we talked about, these concepts are applicable for every stock on every time frame for every type of trader. So whether you're a scalper, a day trader, a swing trader, doesn't really matter. Volume price analysis works on basically any instrument that is traded on the public market. And you could even start to get a little bit freaky with it on the futures or on the options contracts, but we probably won't delve into that too in depth, or even Forex too. You can probably use some VPA on that, but we won't delve too far into those ideas today. Everybody basically already knew this, but the term volume, just as a reminder, represents the amount of shares traded in a given time frame. So on this specific example, we're looking at the weekly chart here, and the volume bars at the bottom represent the total number of shares traded. So for example, in this given period, we could see here, bottom left, it says the most recent period of this chart was trading at 158 million volume. And volume represents the total number of both buyers and sellers, right? Because you have to remember, the market is a zero-sum game. So for every buyer, there is a seller, right? You can't just purchase shares and they appear out of nowhere. Somebody has to sell them to you. All right, yeah, just to make it expressly clear, the buyers are represented with these green volume bars and the sellers are represented with the red. And there was 3 laws of volume price analysis that we covered in our last lecture. The first one was supply and demand. Generally speaking, we said that you could connect this back to just kind of real world or I'll say general enterprise business, right? So for example, if you're a business and you're selling some kind of product, let's say, I always love my PS4, PS5 example, whatever the new one is, because I think it's easy to understand. So let's say, for example, we're Sony, we're selling the PS5. and we have a fixed supply on release of, let's say we're going to sell 1,000 PS5s per day because that's what we're manufacturing. And demand is through the roof, right? Everybody wants to buy a PS5. So with that constant level of supply and massive demand, the price was skyrocketing far above the MSRP of $500, and people were reselling them and doing whatever. It's the same thing that people do with I don't know, reselling the clothes, whatever clothes that people resell these days, or shoes that people resell. There's a fixed amount of supply and demand so high for them that, well, the price goes up. And the same thing works the other way, right? Like, let's say, for example, let's think back to March of 2020, where the supply of gas was the same as always, right? Supply of gas, supply of oil was the same as it always is. There's plenty of oil to go around for everybody. But all of a sudden, demand hit the floor because everything shut down, right? So nobody really wants to be driving anymore. And as a result, the price of gas and price of oil cratered, right? At one point where oil hit negative $40 a barrel, right? Basically paying people to take oil. Would have been an excellent time to fill a couple 55-gallon drums with some crude oil anyway. That's kind of the first law. The second one is cause and effect, where volume is the cause and price is the effect, right? You have to remember that volume represents those raw buyers and sellers. And if the volume of something is zero, well, there's not going to be any move in price, right? Because nobody's trading it. It's going to be the same as it was before. And I can't think of something. Actually, let's see if this name's still listed. This was a name open. Okay, wait, was it open? I can't even remember. This is actually still trading. There was some name similar to this that was getting acquired at one point and basically stopped moving, but I forget. I can't remember. It was some Kathy Wood stock. I got another one. X maybe. Okay. Not as good. Anyway, you can kind of see just if we look at this specific zone here, still kind of volatile. Anyway, long story short, this name, United Steel, was supposed to be acquired around 50 something dollars a share. I think 54 at the time when this news released. And you can see once that news came out, it kind of just sat in a range for a while until we got some other news saying it was maybe a little bit less likely. Long story short, it looks like, oh my God, wow, great time to look at this name. Looks like the acquisition is back on. Anyway, this is not as good of an example as I thought it was going to be, so I'm going to move on. And the last law of volume price analysis is called effort versus result. And this is what Newton's third law, which is every action must have an equal and opposite reaction, which should be true in an ideal volume price analysis setup. So let's say, for example, let's even actually go back to our prior example with X US Steel here, because that was pretty decent, right? We have this massive move, right? We have a gap higher with the bull bar closing near its high, and let's see, a 14% move in a single day, right? Well, that's also characterized by record high buying volume. If we look over the past few months, we haven't seen this level of buying volume since all the way back here. So clearly, this is well supported by both buyers and sellers, right? And same thing goes for some of these sell days, right? This big sell day here, we have a massive move with volume to correspond to that. And you can see in general, we don't have really too many big moves without high volume, right? The only kind of exception is here, where we have a small bar in high volume, but you have to factor in the consideration that price also gapped up basically 30% to start the day. So long story short, when we see large moves in price, we should also expect to see large volume preceding that move. Another really good example is Tesla from back here. Right? This name really didn't bottom until we got this super high above average volume on the buy side. And same thing goes here, right? We went into this period long-term consolidation, a little bit of a downtrend, and the name didn't really bottom until we got this nice big blowout day with buy volume. So anyway, long story short, volume definitely precedes large moves in price, and any kind of catalyst to a large move in price always is going to start with some amount of volume. At least it should, if it's going to be, maybe a plus setup. There's one more that I'm thinking of, Oklo. It's probably another good one. Oklo is a great example recently. So check this out. You have this gap up here. That was when price was all the way back at 35 on very high above average volume, right? Again, another gap up here on even higher above average volume. And of course, the name followed through higher today, right? This is, exactly the principle of volume price analysis that we're trying to illustrate here, right? Volume always precedes price. And one of my favorite analogies is you could compare like a big fund with a lot of money to an elephant or an orca in a bathtub, right? If you dropped an elephant into a bathtub, and this is really silly for me to say this out loud, I almost can't stand hearing myself say it, but if you put an elephant into a bathtub, right, it's going to be pretty obvious. You know, the bathtub, number one, is going to break. There's going to be water everywhere. Your whole bathroom is going to be destroyed. You're going to know there was an elephant in your bathtub. But if you dropped a couple, quarters or a chicken in your bathtub, you probably wouldn't notice much of a difference, right? You'd walk in your bathroom, you'd say, oh, there's a chicken there, but no big deal. I still got all my water. I still got all the walls. Everything's good to go. When you see super far above average volume like this, it's like a whale or an elephant or whatever in a bathtub, right? Large funds who are trading with significant amounts of money and massive position sizes, right, on the order of hundreds of millions and billion-dollar position sizes. The unfortunate reality for them is that they cannot hide when they take a position, right? Seeing large amounts of money flowing into a given name is so easily represented by the amount of volume. And here we can see on this day, Oklo had 40 million volume, almost 39.2. And if we just determine how much money that is, so let's just say 39,000 times, let's just call it an average price of, let's just be generous and say $34. This specific volume bar represents $1.3 billion of trading activity in a single day, right? It's an amount of money that probably most of us can't even really fathom. What is that? Bigger than the biggest lottery winner ever, and probably more than 99.999% of people ever have or ever will have in their entire life. And we see this accumulated in a single stock in a single day, right? That is a sign to everybody in the world, people are getting in this name and they want to get in bad, right? This is like everybody screaming in the pit. There's a line out front of, the store to get into this name. People just can't get enough of it. These are the sorts of signals that you want to look for, and why these 3 laws of volume price analysis, if you stopped watching the lecture right here, stopped watching the lecture series here, these 3 rules would still get you so much further than you were at the start of this discussion, even today, but especially last week. My favorite 3 points of volume price analysis all surround these specific rules. So I'm going to continue to do my best to kind of connect back to the laws of volume price analysis whenever I can. I hope the explanations make sense. It seems like Robs enjoys the analogies. Sometimes I start saying one and it just really kind of bothers me just hearing myself say it, but I hope it does work for everybody. But yeah, any questions or things that I could clarify before we keep rolling? Okay. All right, let's keep rolling. So let's talk about some first applications. And we've continued to refer to a lot of different examples. I'm going to keep referring to real examples. A lot of the examples I have in this PowerPoint, it's been a while since I've looked at it, but I believe a lot of these examples are directly from the book. So they might not be, perfectly connected to real price action. So I'll do my best to connect that back to a real chart whenever I get the opportunity. All right, so first concept is volume validates price, right? This comes back to, let's see, what law was it? I think kind of number 3, right? Cause and effect. Volume is the cause, price is the effect. When we have high volume, we should expect a large move in price, right? Because people aren't buying a stock for no reason. People don't just buy because, they woke up on the right side of the bed, right? People are buying stocks because something has fundamentally changed, or there's some fundamentally positive outlook ahead for the stock, right? That's the number one reason people are investing. They're not investing because Amazon's a big company today. They're investing because Amazon is going to be a bigger company in 10 years or 20 years, right? That's the majority of names that are trading in the market right now, is those growth-focused names. And you're going to have your more kind of boomer stocks or names that aren't really growing much, but they're not going away, like your Coca-Colas and AT&Ts of the world, which, people are not really rushing in or out of those names. It kind of just is what it is, But for the majority of the stocks that we trade in the market, these are names that are projected to grow at an accelerated rate or are growing at an accelerated rate. They have some really cool new business, outlook or interesting fundamental analysis that might be something that they're going to head towards in the future. Long story short, buyers are buying for some reason that we may never know. And it's our job to identify when these sorts of big money names are stepping into a given equity. So this is kind of the first example, real simple stuff. It's kind of funny to cover this, but this is an example of a reasonably massive bullish candle, right? So this is a blue candle here, but in the book, they use like bull bars or green candles are going to be represented as blue. So that's just something for you to be aware of. So this is a bull candle. And if this red line here is the average volume, we have a volume bar that is twice the average, right? Automatically, this is significant volume, right? Additionally, we have a nice big bull bar, right? So we have a bull bar that's closing near its high, pretty minimal wicks as well, indicating that this was a strong move higher. And obviously, if it wasn't clear already, we have high volume, right? So this is an example of volume validating price. This is like a lot of the charts that we've looked at, right? For example, Oklo, right? We have a big gap up, elevated volume. That makes sense. Big gap up, elevated volume. That makes sense. Something like X, we move 20% over prior all-time highs on big volume. That makes sense. We have something like, let's take a quick look at like our, let's look at like PLTR. That's probably a good one. We have PLTR carving out this bottom on elevated volume, right? 2 high volume days. First, as we set this low, the second as we reclaim these prior highs, and then 2 inside days after that, right? That makes sense. Nice elevated volume as we move higher with these big outsized candles, bull bars closing near their highs with widespread bars. Now, a counter example is going to be a smaller bar with below average volume, right? So if this red line is the average volume again, we can see this volume bar is about half the average. You can also see we have a much smaller spread candle, indicating that price didn't move as much during the day, right? We didn't really get a lot of movement. And we have low volume as well that correlates with that. So generally, what are we seeing here, right? Well, in general, right, this is how our effort typically is going to connect to a result. Below average volume is going to correlate with a small candle spread, right? So we should kind of see if the volume bar is generally small or below average, the candle should also represent the exact same. If we have average volume, we should expect an average size spread. And if we have above average volume, we should expect an above average sized spread. So let's just connect some of the dots here, right? Our first volume bar, and I'll just tell you now, these 2 charts line up exactly. So these are the candles for these volume bars. You'll just have to trust me on that. So this far left volume bar here corresponds to this large outsized candle. It's the biggest spread bar in the entire period. And it also correlates to the largest volume bar, right? So that makes sense. Here is our first big green spread bar, right? So we can see we have a real big green candle here with basically average volume, right? It's nothing really significant going on here, right? So that's going to be a little bit of an anomaly. Right before that, we have a really small red bar with really high volume, right? This is the second highest volume. This is not the second biggest move at all. It's not even close, right? It's about the exact same size as the prior bar, yet the volume doubles between the 2 of them, right? So that's a volume price anomaly. That's something interesting for us to be aware of. And we could also generally see a trend here. The above average volume is always, or more typically, bear days, right? Or the higher volume in this specific example is always the red days. And one of the most kind of important spots is right here, which corresponds to this level here. This is right before this massive gap down. We have a large, or excuse me, that is not true. This is right after the massive gap down. We can see a large amount of sellers stepped in, validating this move lower, right? So this is a really excellent, just quick way to have confirmation on what the trend is, right? If we're obviously seeing lower highs and lower lows, trend is always going to be down, right? Additionally, if we see, what's it called? High volume on these red days, also that's going to continue to validate the fact that the trend is down. Rob says, what do I set my volume average line to? Yeah, so for me, I kind of vary between the 200 and the 50 period average. Also, what some other people like to do is just have the average for the entire period. So there's kind of 2 ways that I go about it. So I have this study that I run from time to time. Let's just see this one. that basically paints the volume bars yellow when they're above average. So you can see it kind of automatically highlights which volume is above average and, doesn't highlight which isn't. I still kind of want to refine this a little bit because it almost highlights a little bit too much. But anyway, that's another conversation. So that's kind of one way, is having some, real validated way of measuring volume versus the average. And the other way, which maybe some of you will appreciate, is basically just eyeballing it, zooming out and saying, yep, it looks like the average is basically right around here, right? The majority of these volume bars are hovering around this spot. So I'm going to say 81 million is the average, and we can see automatically which levels are above this bar. And that's one kind of way of going about it in some more systematic method. And then also you can just go in and plot a moving average. So if I go simple moving average and plot the 200 simple just onto our volume here.
It should be in the sorry for interrupting. You should be able to do it. You should be able to do it in your volume study too. That's how I have it.
That's what I just tried to do.
Like open your studies and then go to the settings of the volume study itself a little here.
Oh,
there should be. I can't really see
there
it.
we go.
Okay,
No, I think I just got it. So it's you just apply the simple moving average to the volume subplot, and then change the what it's calculating based off of from a price to a volume, and that seems to work. So anyway, that's another way to do it. There's also like custom studies that people create that literally just look at this entire period that you're looking at and plot the average volume as like a horizontal line. Like there's some pretty advanced volume studies. Let's see, volume. This one's a pretty wild one. This is from Assassin, if anybody knows him. Okay, this isn't even configured correctly. There's some super wild way that you have to set this stuff up. I don't even know how he does it. Let's see if I can figure it out. Oh. Yeah, so his studies get a little freaky once you really get into them. But anyway, this just shows you the extent of how far people take this sort of thing sometimes. All right. So all these kind of connections between below average volume and a small spread, or average volume and an average spread, etc., are all when kind of volume and price are in harmony with each other, right? But as we may or may not know at this point in time, the market doesn't follow any set of scientific rules or laws like this, right? If it did, it'd be real easy for all of us, right? We would look for all this and we'd say, looks like our day is done. This is all we need when we trade. We're good to go. Don't even know why I'm in the class anymore. So unfortunately, it is not this easy. However, if these two things don't correspond to each other, we have what's called a volume price anomaly. So let's say, for example, we have above average volume and a small candlestick spread. That's going to be a volume price anomaly. And here's going to be an example of that, right? So here we can see our average volume again in red. We have our same widespread body, except this time we have below average volume, right? And same thing for our second example. We have that same small spread candle, which is now way above average volume. And again, exact opposite of the previous example that we saw. In general, the most important thing to note about this is a volume price anomaly isn't necessarily a good or bad thing, right? It doesn't necessarily immediately mean anything. The context always matters. So let's say, for example, you see this kind of narrow candle at the top of a trend. I would start to be suspicious that looks more like selling than buying. Or if you see this kind of narrow candle at the bottom of a trend, I would be a little bit suspicious that seems a lot more like buying than selling. So it could be interpreted as more of a bull signal than not. But the context does matter with these sorts of things. And I'm not going to get too deep into like how to specifically trade all the volume price anomalies, because to be honest with you, I don't even really get involved with all that myself and focus on kind of the high quality, highly validated volume price setups. However, just something for you guys to be aware of, right? These things aren't perfect. They never will be. Nobody should leave this course thinking that I just gave them, a Bible of trading and it's going to be working 100% of the time. It probably won't even work 70% of the time. It's just the reality of trading in the market. If you have a win rate above 70, you're doing real well. All right. So a couple more examples of volume validating price. So this is another example of volume validating price. So we have increased size spread bars as price goes higher and volume rising on the way up, right? So we're seeing more attention from buyers as price moves higher. Definitely a nice high quality signal, right? Same thing goes on the way down. We see the spread of these bars increasing as price falls more, and we see volume increasing on the way down. Again, another high quality signal, right? It's indicating that the attention from sellers is increasing as we move lower. And we're going to talk about in later classes some concepts on like, I don't remember what they call the specific term, but essentially it's the sort of pattern that you would expect at the bottom or top, right? Because typically a topping or bottoming pattern comes with high volume. So anyway, that's an example that we'll cover in the future. All right. So again, building on this concept, right? Volume doesn't always validate price on the way up and way down. And we can see the same thing on the left here, right? So same exact example with these, the spread of these bars increasing as price moves higher, except our volume drops off as price moves higher, right? And same idea for this bear volume. We have price going down, volume dropping off. So this again is going to be, oops, I have that all animated incorrectly. So, oops. Again, this is an example of another volume price anomaly, right? So it's not any kind of concrete buy or sell signal. It's just something, when we see volume price anomalies, it's an indication that the environment isn't the most favorable for trading, right? It just tells us that things aren't happening the way we would typically expect them to. And that's okay, right? We don't need to be trading in every single market on every single day. And we don't need to be trading every single stock, right? Sometimes we're going to see a lot of names that look like this, where we just have a bunch of kind of volume price anomalies that don't really fit within any of our defined systems. And we can't really find a trade on any of them. And that's okay, right? Any good or skilled trader, I mean, this isn't actually a blanket statement, so I should be careful. I'm going to rephrase. I'll say most skilled traders with either large amounts of capital or just generally skilled traders typically don't take very many trades, right? Unless they're obviously a scalper or a high frequency trader. That's a whole separate realm, right? But most traders that fit into the category of what we're doing here at Only Options and what a lot of you guys trade like, don't take many trades. You know, the taking 3 to 5 trades a day is way higher than a lot of what these people are doing. At least, you know, opening and closing positions 3 to 5 a day, that's a lot of trading. So a lot of people will take maybe 20 positions a month, maybe less. And that's, you know, round trip positions, open and close. And that's even on the higher end. So point being, long story short, no need for you all to be involved in every single trade. No need for you all to get long, you know, once a day or twice a day or 3 times a day. Sit back a little bit, be patient, spend a little bit more time studying, spend a little bit more time planning your trades out and actually refining the opportunities that you do get yourself involved in, right? Because the majority of the battle as a trader is not winning or making money, right? It's pretty easy in general to make a little bit of money in any given day in the market, right? You could basically buy a call, buy a put on something and hold one of them. And with the volatility that we've been experiencing, you've probably been doing pretty decent, right? Regardless, that's obviously an exaggeration, but regardless, the hard part as a trader is not getting money. It's always protecting the money that you've earned. That's always the thing that people end up struggling with. They get a couple months experience. They think they've figured it all out and they start trading more because they think that's going to help them make more money. That is not how to make more money as a trader. More trades does not equal more money. So anyway, I'm getting on a little bit of a tangent, so I'm going to cut myself off here, but hopefully that helps somebody. Okay, so let's shift over to some real world examples. Now, before I go to the charts, I want to just verify, does everybody kind of get the concepts so far of volume price analysis and what kind of these validated signals look like and what these anomalies look like? Is this generally making sense, or anything for us to discuss any further before we move back to the charts? Anything to cover? All right, let's get into some examples then. Okay, so I'm always going to start. Oh God. So I'm always going to start with the S&P because I think it's a really easy to understand and fair place to start, and it's always going to have a solid amount of volume on average. So let's just kind of take a look from an average volume standpoint. Let's even plot a simple moving average on our volume just to have something to reference here. So let's put this on. Let's give ourselves a 200 period volume average. Let's make it easy to see as well. Make it pink, and we'll make it dotted. And we will also show these signals. Oh, that does not work the way I thought it was going to. We won't do that. Okay, so this is the 200 simple moving average on the S&P volume down there in pink. So we can see pretty clearly in general where we experience some amounts of average volume, right? And you can also generally see when we see average volume that corresponds to buying or selling. I want to start in this period and then work our way back because we've had a lot of real kind of clean trends in price action. So automatically, right, in this first part of the chart, there's 2 days that stand out to me, here and here, right? And what did we see on both those days? Well, this first example, we got a nice long wick to the downside with a bull bar closing near its high on elevated volume, right? And that was before a 8% increase in price, right? Volume preceded price. Here, we see, again, another massive volume day, double the average here. And what happened? Well, price ultimately went 20% higher, but in the short term, did about 10%. That's a real big move. We also have some kind of minor days that are above the average here. We have one here, and one here. And I want to zoom in a little bit on these specific examples because there's something to be discussed here. So the one thing that I want to call out is we have these two above average days right here. And you'll notice one of these above average days is a red day and the other is green. The most important thing for us to note is that every above average volume day isn't just going to result in some kind of reversal or some kind of big move, right? It's not that simple. The context is always important, right? And on this specific case, we got above average volume, but also this was after a gap up. And also we held above these prior highs. And also we're in an uptrend, right? So there's kind of three things working against the fact that it's just a big above average red volume day, right? Even though that's true, there's other things to consider in this specific example, right? And same thing goes for this day here, right? Yes, this day was technically an above average volume day, right? The volume was above the 200 simple moving average. However, if you look at the price, all it was doing was just sitting at support, right? It's not going to be as bearish. Again, another above average volume day corresponded to a gap up. Here, another above average volume day. This one, again, right? We're in an uptrend still. And this day just happened right at support. So not the end of the world. Here, same idea, right? Above average volume day. This time we got a little bit of follow through. The important note is that we've highlighted 1, 2, 3, 4 above average volume red days. The reason that I'm calling attention to these is because these all occurred when we're in an uptrend. In general, when you're in an uptrend, those above average volume sell days are going to end up being high quality places to buy, right? We've seen it time and time again. Those above average sell days typically end up resulting in good entries. But long story short, sometimes there is some kind of short-term follow through in those. And that is why you do have to trust and you have to be a little bit skeptical of any move lower until it breaks some kind of important level. But maybe that's a longer discussion. So let's fast forward a little bit to the most recent bear. Here, for example, is an interesting one. Here, we break above this level of resistance, but look at the volume, right? We have a nice, let's focus in on this specific spot. Let's focus in here because this is an interesting example. So here we have a nice break or a nice couple breaks above this horizontal level, right around 610, these prior highs. The first time we try to break above it, notice the volume. Let me make this just a bit larger so we could all see it a little better there. The first time we try to break above, let's notice the volume. And the second time we try to break above, let's notice the volume again. we're getting pretty significant breakouts above this very key level, right? These are prior all-time highs, yet we're not really seeing any significant volume, right? Here we're reasonably below the average, and here we're about half of the average, right? This is not something that you want to see on a breakout. And obviously this is in hindsight, and obviously we all know that this breakout failed and price moved 200 points lower or whatever. That's not necessarily the point.
I have a question when you're done.
Yeah, no, go ahead. What's your question?
So you know how like in the beginning of the chart, like how the bars are low and then there's one big green bar and then it goes down?
Mhm.
That's technically like it's not that bullish, right? But if that bar went over that other bar, it'll continue to go up, but with volume, right?
I guess I don't fully understand. What do you mean that bar went over what other bar?
So this green bar, the biggest one, right after it went down. It went low.
Right.
If
Right.
that went over that, it would continue going up, right?
In general, so that's kind of the interesting. It's a very interesting question, Dennis, and that's something that we're there. I have a lot of specific examples on like bottoming and topping processes in the market because they're a lot more nuanced, I feel like, than breakouts. So if you don't mind, I'm going to decide to not answer your question today.
It's fine.
But I promise you that we have like a full lecture that talks about these same ideas. It's a really good question. I can't answer it in like 2 minutes well.
No problem.
Okay. I really appreciate the question. It's a great question. Okay. Yeah. So long story short, right? We got to break out over this real important horizontal level, right? All-time highs are always going to matter, especially on the S&P. And when we're not seeing that participation in buyers on this move higher, it's always going to be a red flag, right? It doesn't mean go short. If somebody, saw this breakout on low volume and said, I shorted it, I would say, great, you got real lucky, right? Nice trade, but, you could have shorted multiple other breakouts on low volume. I guess not that one. I guess we had decent volume on a lot of other breakouts. But long story short, right, you could short breakouts on low volume all day long. That doesn't mean, it's going to work all the time. It's just, again, a little bit of some reason to have a little bit of caution, right? Does it mean you can't get long on this breakout? No, right? Just have a little bit of a tighter stop, right? We're in a bull market. It goes higher, especially when we have a nice breakout like this. So put your chips on the table. So long story short, this is a nice example now in hindsight where we can see that we got that breakout, but there was no volume there supporting it. And another kind of red flag that we got soon after, again, wasn't directly a reason to just get short, but we have this pretty key horizontal level right around this 580 to, let's just say, 580 to 575 area. The problem here is we got multiple above average sell days as we approach this level and then ultimately break through it, right? And the buy days, except for this one was pretty significant, but basically every single buying or bull day was followed up by above average selling volume, which is not something that we want to see, right? And there's so many more examples that we're going to get into throughout this lecture series that I really don't want to step on the toes of the future lectures. But these are the sort of things that you're going to want to start paying attention to. And these are the concepts that we're going to continue to discuss as part of this lecture series. But I'm realizing that I'm getting a little bit further in terms of what I'm covering than I wanted to today. So I'm going to take a quick kind of pause. How is everybody feeling so far? I know I'm kind of rolling through a lot, but what's everybody's thoughts so far? Rudy's feeling good. Nice to see you, Rudy. Everybody else doing all right? Cool. All right. So let's take a look at one more example then, and maybe we'll wrap this one a little bit early because, again, I don't want to step on the toes of too many different concepts that we're going to cover. One of my favorite examples in recent history is Palantir. This is one of, well, this one's pretty good, but also Hood's pretty good too, but we'll stick with this one. This is absolutely one of my favorite examples, and I'm just going to tell you why. So in general, when we have above average volume that's record setting, that is the easiest time to start paying attention basically ever. And Palantir is a great example of this, right? When we set record-setting volume, it's time to pay attention. And Palantir set record-setting buying volume when it was trading at 21. It is now 500% higher. Now, again, I could find names like this all day. I want to be really clear. I could go look back at any chart and say, oh, look, max volume on this day, where were you, right? It's not always that easy, right? And I totally get that. And, I didn't get long Palantir at 21, so I'm not saying I'm a genius here. Regardless, these record-setting volume days are some of the best examples of time to pay attention, right? And it actually gave kind of two opportunities here. We had this record-setting volume day back in February of 2024, then again another one in September of 2024. And price was only, I say only, but only up 70% from that spot, which seems like a lot, right? However, one of my favorite quotes that I've ever read is, a stock that has doubled once can double again a lot faster than it did it the first time, right? And take that as you will. That doesn't mean, buy every stock that's doubled and pray for another double. But it is one of the most insightful quotes, right? A lot of us kind of get scared of names as they've moved higher, and rightfully so, right? It's hard. It's really hard to want to get long on a name that's appreciated 100% in 6 months, right? It's incredibly difficult to do that. However, that is a very typical characteristic of some of the biggest winners in the marketplace. The names that advance 100% or 200% in a month on high volume, that's happening for a reason. Oh, I shouldn't say a month because that's a little unsustainable, but the names that advance 100% in 6 months, all that's saying is people can't get enough of this stock, right? And that's not just people like you and me, right? Me and Denz and Lauro and Dennis buying, Palantir. It's not even a drop in the bucket. I mean, it's like it doesn't even exist. It's like a molecule of water in the air. These moves only happen when large names with large amounts of money get in and start actually having an impact on the market. Because that's how they operate, right? They have too much money to where they can't just, buy 10 shares and it's meaningful to them, right? We could buy 10 shares of something and that could be a meaningful part of our portfolio. But 10 shares to them, it's like you might as well not even own it. It costs more for them to buy that 10 shares than it's even worth for them. So they're buying in lots of hundreds of thousands or millions of shares. And it's real hard for them to hide that sort of activity. So Palantir is a real great example of volume preceding price. And we could see, again, massive moves on massive volume. It's just shocking the amount of volume that this specific name accumulated. Hood's another real good example of that. It's not as good, but similar idea. This is more of a volume in the accumulation pattern, which is something that we will cover more in the future. Let's think about what else was pretty good recently. TEM was also a pretty interesting one. TEM was a pretty interesting one. So check this out. This name had, again, what was the average volume? Oh, let me take a step back. This was a name that Nancy Pelosi invested in, and obviously it has had its fair share of volatility. But just taking a quick peek at this, look at this, right? The day this name IPO'd, it had 6 million volume. The day this name had its record high volume, it had 11 million. The day this name had some news that Nancy Pelosi bought, it had 3 times, not the average volume, but 3 times its previous record, from 11 million to 33 million. I don't really care what you say, whether you think it's just a fluke or you think people are buying because Nancy Pelosi is buying. It doesn't matter, right? It doesn't matter why people are buying this name. All that matters is this is a historic day for this stock, right? This is a day that the most people have ever bought this specific stock times 3 in a single day. That doesn't just happen for no reason. And obviously, as you can see, after this one day, the stock ultimately moved 90% higher in basically a month. And obviously, it didn't sustain that move higher. It ended up coming all the way back down, which is absolutely part of how these growth stocks move, right? They don't always just move 100%, then move 100% again and keep going forever. Not every name is going to move like Palantir. So obviously, there's a time and place to start selling, right? You're not just going to hold above this level and not sell a single share, or watch it break back below and be like, yeah, we're probably fine. It's probably fine. No. So you shouldn't be behaving like that. But regardless, the same pattern continues to repeat itself, right? Again, very same idea. We have 2 very high volume days, again, after a period of average volume. And lo and behold, decent follow through higher, right? A lot of volatility, but makes this level even more attractive to pay attention to. Two very interesting examples, I guess three if we include Hood. The point being, understanding that volume is the cause and price is the effect is one of the most foundational fundamental concepts of volume price analysis. And the more that I have the opportunity to drive that home, the better. This is also maybe an interesting counterpoint too. Archer is one that I've been watching for a long time now, at least the last few months. This one had record volume, continued moving higher, also had a real good day of volume, but has now moved, 20% lower since this day, right? We had double the average volume and a big buying day, nice big gap up, but it didn't hold, right? So I want to highlight both sides, right? Just because we have those big moves higher on volume doesn't mean you just can say, yeah, I'm not going to take profits because, the volume price analysis rules say it's going to keep going. Well, it says that, but that's not always how it works. So have to think of both sides of the trade. Okay, I feel like we covered a lot, and I don't know how we went through the material this quickly. Yeah, great example in Ionic. Yeah, look at that. Look at this. Yeah, I mean, odds are this move is going to go test 54. I mean, this thing is very likely headed to test 54. Now, does that mean get long at the highs here at 48? I mean, not necessarily, right? There's probably a little bit more of a reasonable spot to enter, maybe closer to 45. But same idea. And this is probably part of a larger theme with the rest of quantum computing. QUBT, similar idea. RGTI probably doing something similar. This is even a more powerful. Wow, you bought this at 7? Jesus, dude.
What
And
company?
look where you
what
bought.
kind of is that?
I think they're quantum computing, I believe. I could be wrong. ILNQ.
Were you
Yeah, they
searching
do
up
quantum
right now?
computing.
Oh, okay.
Yeah. So yeah, I mean, I'm just gonna cherry pick where I think you bought, Rob's, because I'm just gonna say, let's say you didn't buy here because you said you bought at 7, but look at where this move started, right? It started with record high volume. Not quite the record, but on par with record high volume. Just a random day, record high volume. And from this specific day, price accelerated 500%. Now, again, I can look at this all day and find the best examples, and they're all going to support my same theme. But I hope that I'm giving you guys a good balance of doesn't always work this way.
Hey, so what happened with me there, though, is I just was sitting around thinking one day, and I was like, quantum computing might be the future. So I started researching the quantum stocks, right? And then I just started accumulating around 7. And you can see in the chart that I was picking it up last August, started it around last August and just kind of added,
crazy.
20 shares here, 20 shares there. Eventually I got up to a couple hundred.
That's such a crazy time to be buying. That's awesome.
Dude, that's nice, bro. I like that way of thinking.
Yeah,
and then I watched
have a good mind on.
I watched the price, and you could see, if you look around November, I saw it starting to curl again off of a 20 EMA on the daily chart. So I was just like, you see right there around what is that? November 4th ish, November 5th, 6th.
Right around here.
Yeah, so I saw that little curl, and that's when I really loaded it up, and then I trimmed half of it around in the early 40s. Want to say 41, 42. I started trimming.
Rob, how strong was your bias on that? Did someone give you that information, or you just came up with yourself?
I just was sitting there thinking about what the future could be like, and I just thought, quantum computing just popped in my head, man. And I just started looking at all these different quantum stocks, and I was getting info online that IonQ was the leading pure play quantum stock at the time. So that's why I just really did it.
That's good, man. I'm proud of you, man. That's what's up. That's good.
That's super solid. Super solid.
I'm still sitting in half the position.
Yeah, I mean, why not?
I held through all that.
Hopefully, you've sold enough to make it free and then some at this point.
Yeah, I held through all that downward. And I'm looking back on it. I should have been picking it off the 200 daily moving average, but I didn't. I should started picking more there. But hindsight's 2020. What can you do?
Yeah, it's real easy to look back at any chart and say, yeah, look where you
Yeah.
could have bought now, right?
Exactly. Yep.
Never that easy in the moment. That's why we review these examples, though. I mean, that's how you learn, right? That's how you look back.
It did
and
like
say,
a
yeah, I could've
perfect
bought-"
double bottom off of the 200 daily almost.
It really did.
And then
Yeah.
now it's ripping.
Damn near close to perfect. Yeah. But that's how you learn, right? You do something or you don't do something and you look back on it and you're like, write that down for later. Remember that for later the next time you're in that same situation.
Yep.
All right. Last thing we'll look at based on Colin's question is NVIDIA. What does Colin want to see for NVIDIA? Cool. So from a volume price analysis perspective, NVIDIA doesn't have anything super unique going on. Like we're not really seeing any crazy above average or crazy below average volume. Obviously the more recent above average spots were right around here when the rest of the market bottomed. But outside that, there's not too much to highlight. Realistically, the average is probably somewhere around here-ish. So if anything, we've been seeing kind of below average volume. Maybe it's a bit lower. I could calculate the real number, but yeah. Anyway, in terms of NVIDIA from a volume price analysis perspective, not really much to say. Now, obviously, you could look at this and say maybe there's a little bit of a bull flag going on. You got a pretty big pivot here to watch out for. Also, probably this day as well to be mindful of that we're just breaking back above. Also back above the 200 and setting a little bit of a higher low into the EMAs. So it's got a good look to it for sure. But is this, an A+ setup from a volume price analysis perspective? I would probably say no. That doesn't mean you can't trade it. But for the context of this class, I would say it doesn't quite fit the parameters. If it did, I would say probably we would see something maybe a little bit more like this. If I was going to say this is an A+ setup, I would say we want to see something that looks, let's just fake this candle real quick, 138, and let's just do, I'm doing some fraudulent stuff here. Let's just say it looks like this. So if we saw it like this, I would say this is a more high quality setup from a volume price analysis perspective, right? We had rising volume on the way up, two nice bull bars and these two sequential gaps, pretty nice consolidation on relatively average volume. If we really wanted this to be fully A+, we would say, we would even add some volume to this day. So we could go like this. It'd be real nice if we could just do this normally, huh? And say it looks something like that. That's where I'd start to be like, all right, this looks real good, but it doesn't. Anyway, that's the fun that you can do. That's the thinkorswim magic. Cool, everybody. Well, I think that's going to do it for us today. This was a fun one. I appreciate your time. Sorry I was a little bit late to start this one, but I guess didn't matter too much. Anyway, yeah, next one.
Have a good night, brother.
Thank you. You too. Next one, let me remember what the topic is. I already forget. Next one is going to be more applications of volume price analysis. So expanding the concepts a little bit from the basics that we talked about today. I know we got into a lot of it with the examples, and we're going to continue down that same path. All right, everybody. Well, thanks again for your time. I will see you guys all in the next one.
Thank you, sir. Appreciate you.
Yeah, have a great night. Peace.